Hi there, welcome to Closing Trades. Let's get a sense of what the markets are doing right now. And the Nifty is absolutely flat, above 24,625. Sensex 2 flat. India wakes up about 2.3%, and Nifty Bank also looking resilient to 0.3% uptick coming in. Let's address the flash on the bottom of the screen. S&P has upgraded India to triple B from triple B minus. So that is a big news flow coming in. The markets as of now not penciling in any of this positivity right now. We'll give the rate some time to absorb this news flow and see what happens on this front. We have Madan Sapnavis, Chief Economist at Bank of Baroda, who's joining us on the show. Madan, hi, and thanks so much for your time this afternoon. Good afternoon to you. Please give us your first take and on this development and how big is this for our economy overall?
Yeah, good afternoon. And I think this is a very big development for us, especially because of the timing of this upgrade. Now, we have always believed that India does deserve a much higher rating. So even triple B, to my mind, is still on the lower side. We should definitely be in the A plus category. But I think this movement from triple B minus to triple B, the reason I say it's a big news for us is that this is the time when we're going through this entire controversy over the tariffs. There are these additional tariffs which are going to be imposed, and there have been different views on how the Indian economy can get affected. Now, the very fact that S&P at this particular point of time is giving any kind of an upgrade to India itself ratifies the strength of the Indian economy. So that is how I look at it. That here we have S&P, which has always been very, very miserly when it comes to upgrades. It has done it for India at a time when we are going through a tough phase. Though lots of us economists, we do believe that the growth story of around 6.5% is something which can be maintained. But that is only the starting point. Even the internals are something which have definitely been appreciated because S&P also looks a lot at how the government finances are being handled, how the currency is behaving, how inflation is moving. So it looks at a plethora of factors. So definitely it gives a very good signal about the health of the Indian economy.
Sure, Madan. Also want to understand the rationale behind S&P, if you can help us with this upgrade, because they have kept their outlook also stable. Given the way our inflation is trending lower, our macros are looking solid right now in terms of the GDP growth, also that 6.5 figure that you were mentioning right now. Help us understand the rationale that comes behind this upgrade, because while all looks good domestically, globally, a lot of headwinds could be headed our way because we still have some tariff uncertainty. Do you believe this upgrade has come at the right time?
No, I think it's come at the right time because this is a very strong message sent to the entire world. Now, could the outlook also have been changed to positive? Yes, it could have been changed to positive, but I think given this uncertainty which is there in the environment and the way in which things could probably move, I think that's why they've been a bit conservative in terms of not changing the outlook to positive. It was ideally any kind of an upgrade like this we have seen from triple B minus to triple B should ideally have also gone with a positive outlook, which would have given us reason to believe that there could be a further upgrade which could be coming. But since it comes after a long time, I think this is something which is very good for not just for India, but also for the markets and also for the outside world, because it's a very strong messaging. That's the way I look at it.
Madan, also help us understand what kind of negotiating power this now gives to India when we go to the negotiating table with the US, with Russia. All of these important meetings are lined up, and we're hearing that a lot of world leaders are going to be meeting each other pretty soon. Give us a sense of what kind of bargaining power or negotiating power this now gives India and how this affects our cost of borrowing, if at all.
See, if you're talking of the negotiations we're having with other countries, I think the moment you get a ratification from S&P, I think it's very, very timely. So it's very fortuitous that it's been done just before we're going in for negotiations, so that the other country also knows about how we are actually looked at. It's one thing for us to say that we are the best growing economy. That is one thing for India to say. But whether or not we like it, when we have a rating agency, a reputed rating agency actually ratifying it, it actually gives you that much of more room. So I think when any country is talking to us, know very well that this is a country which is economy which is doing very good, and it's not worth actually breaking economic relations with them. So that's the positive thing which comes out. Now, in terms of cost of borrowing, yes, definitely. As far as, see, the Indian government doesn't borrow from overseas markets, so actually it doesn't affect the Indian government's borrowing program. However, a number of companies which are accessing the international market, I think they're the ones who would stand to benefit, because you normally tend to borrow at the sovereign rate plus a premium. So this particular premium at which we are borrowing would definitely come down on account of this upgrade. So I think there is definitely going to be a collateral benefit for Indian companies which are borrowing in overseas markets, because the rating itself gives you that kind of an edge. Now, how significant it will be, it may not be very, very significant, but even something like 5 or 10 basis points on the whole could make a difference at the micro level.
Sure. And Madan, also you did say that this triple B rating, although it's an upgrade, you still feel like this is not justified and we deserve a slightly higher rating. Where do you peg this rating could be? And do you believe this stable outlook is good enough, or do you believe we could be tilting towards the positive outlook in the near future?
No, I think we could definitely be tilting towards a positive outlook. As I said, that triple B, you will have, it's actually a slow climb, because normally you always get upgraded. First, the outlook changes, so then we move to positive, then you probably move to a triple B plus, and then a triple B plus, and then you move towards the A thing. Ideally, if you look at it, I think India could be in the region of around A minus, A, depending upon how things develop. Because if you look at most of the parameters which the rating agencies have been looking at, I think they have been very, very positive all through. So it was something which we felt was not a fair thing being done by rating agencies, keeping it at triple B minus. But this is probably a good baby step, I would say. But we could be expecting more steps, but not immediately, because I'm sure everybody would like to see as to how various countries perform, or how they actually, what the indicators look like, especially after they are through with this entire tariff saga and we know what the final situation is.
All right, but along with that, let me also now welcome Mr. R. Gandhi on the show as well. He's a former RBI Deputy Governor. And Mr. Gandhi, indeed a very positive news flow coming in on India ratings, an upgrade coming in by S&P. How do you see this, and do you believe that it could be one of those re-rating triggers for India as well, which can help inflows into the market as well?
Of course, definitely it is a happy thing that we could get the higher rating. But in my opinion, it was heavily delayed. It should have come much more, because we, based on the fundamentals and the macros that we have been maintaining all this in the recent past, one always expected these kind of ratings upgrades should have come earlier. Anyway, it has come now. That is useful. Both for the corporates who depend upon or who rely on foreign funding. And not only that, now as a borrower, even as an investment country also, many international funds, they also look at the rating before they increase or enter into the market. So that way also we may attract more investment, whether it is FPI or FDI also, based on this additional upgradation in terms of the rating and stable outlook. So that way is definitely a positive feature, and especially in the context that when the tariff-related discussions are going on, there is certain uncertainty people are talking about. This comes kind of support for Indian economy in general. That definitely there will be quite a lot of positive things happening.
Right. And Mr. Gandhi, rightly, like you said, this will also resolve the entire issue of private capex not really picking up. While, some conglomerates did claim that there were green shoots visible, I guess this would resolve and be a step in the right direction as well for more private capex to actually come in.
Certainly, because as I mentioned that there are every type of investor has a particular threshold or hurdle rate which they would want before they enter into a market. So that way triple B becomes a very investable proposition. So that way those interests will certainly be activated, because we have now got this rating.
Okay. Mr. Fadnavis, as well as Mr. Gandhi, just Subrahmanyam, stay with us. I'm just going to bring on board my reporter, Ankur Mishra, as well, and get in more details on what perhaps the rationale is, Ankur, of this upgrade by S&P.
Yes, perhaps there are four rationales which generally rating agencies keys. One is the robust economic growth. We have seen 6.5% growth, which has been there for India in FY25. And more importantly, if you would have seen even RBI's forecast this time, even for Q1 next financial year, the expectation was 6.6%. So robust economic growth. Apart from that, policy and political stability is another reason why rating agencies upgrade these kind of ratings. Another thing is quality of government spending, and what quality is important here. Remember, in the last quarter there were concerns about the spending, but gradually it got picked up, and perhaps that could be the reason why S&P has given this kind of upgrade. Also, commitment to fiscal consolidation and deepening economic reforms are the parameters of why and how the countries are rated. And now S&P has given thumbs up on India on these parameters, and more importantly, the outlook seems stable, and that is much more important in the context of how geopolitical tensions are going on, how tariffs uncertainties are there. But still, India has now got thumbs up from S&P.
Okay, so that's the take coming in. We also have some more lines coming in from S&P, wherein they believe that the effects of US tariffs on the Indian economy will be manageable, and they're also saying that the India monetary policy looks more conducive to managing inflation expectation. Mr. Sabnawis, your thoughts on these lines? And we were talking about the tariff impact, but any further thought on that note?
So I think all the boxes that had to be marked have been marked by S&P. I think that is what we're really getting from here. There is the growth story. There is the fiscal consolidation we're looking at. We're also looking in terms of monetary policy, which you have mentioned, because I think the RBI has taken a very nuanced view. So it's not a case of saying that we're just going to keep cutting the rates for the sake of cutting it. I think the message which was sent in the earlier policies, I think that is very clear, that while they would be data dependent, they would be willing to step in, but they would be walking cautiously, knowing very well that a large part of this inflation coming down could be because of the base effects, and things are going to start moving upwards from the fourth quarter onwards and into the next year. So I think when the S&P is looking at any kind of evaluation, they would be looking at all these particular factors. And the way I look at it is that, okay, S&P has done it earlier. If you look at private agencies like JP Morgan and Bloomberg, including Indian bonds in the indices, that itself was an indication of how well the Indian economy was doing. While we may not technically be a developed economy because of the per capita income mark, but the fact that we have been included in these indices earlier itself, 1.5 years back, I think that itself was a very positive sign. And it was only timely that appropriate that S&P had to do a similar thing. So I'll go back to saying that the timing is very much important, because this is the time where we can actually go with our heads up, saying that the Indian economy is one of the brightest sparks today. And from what you have put out, S&P also believes that we'll be able to tide over this tariff issue, because I think among all the countries, I think India and Brazil are the ones which have been singled out with higher tariffs. The fact that it's saying that the growth story is not going to be impacted significantly in this entire tariff issue is a very big positive for us.
All right, indeed a very big positive coming in. But Mr. Gandhi, I also wanted to understand that given that India continues to be one of those fastest developing nations, and along with that, we also have our fiscal deficit in control. Given this scenario, do you believe that there could be a further case that in the next 2 to 3 years, given the strong standing position of our fundamentals, there could be a case wherein a further re-rating could be on the cards?
Yeah, that's what I mentioned earlier also. Even in this upgradation, we had expected much earlier. So that we have further consolidated on all fronts, as just now Madan also did mention quite a bit about it. It is not just the growth rate, fiscal prudence, monetary policy effectiveness, and then current account deficit kept under tight control, and foreign interest continuously being there. So overall, in every type of macro and other features, we are ticking the boxes very correctly. That would mean that we should be getting further upgrades. But as we all know, rating agencies are very quick when they do downward rating, but upward rating, it definitely takes a longer time because it looks like they want greater assurance, again and again reinforced assurance that things are sustainable, that they know that the upgradation will take time, but it is due, in my opinion. It should be coming soon. Anyway, it is all in the hands of rating agencies.
All right, one important information which is coming in from S&P upgrade is about the mentioning of US is India's largest trading partner, but do not expect even 50% tariffs to impact India much. That is the rationale which has been put forward by S&P in the upgrade which has been given. So, Mr. R. Gandhi, I want to understand from you, when I asked a question to RBI Governor during the press conference, I asked about the aspiration of the growth. Now you think even this upgrade coming, do you think we can move little closer towards 7% in the current financial year?
No, there is no such a direct relationship with a causal effect because the upgrade we have will be having higher growth. Higher growth, the reasons are much different, not because of rating. That depends upon investment that is going to take place in the economy, whether it is a private investment or public investment, consumption growth, agriculture growth, so many factors coming. Yes, certainly the aspirations are there to have strong growth because everyone definitely wish that by we turn 100, we become a developed nation. That is the aspiration. So the work towards that is a continuous process over these next 20 years plus. That way, yes, one would always want to grow higher. Now that we have been clocking at 6.5 for the past several years, we should definitely be thinking about reaching 7+ in the next 5 years and continuously to increase further.
Mr. Sabnavis, I want to come to you regarding the aspiration of growth part. Although the projections do not have direct correlations, but as far as the money which is coming in India, how much do you think that will have an impact after this upgrade, and moreover other rating agencies will take a cue?
See, in terms of more funds coming in, yes, we do expect it, but we should also remember that in these uncertain times, we cannot expect anything to happen immediately in the next couple of months. So I think it's going to be a slow process because you see a number of investors do have a mandate saying that you can only invest in certain kind of rated countries. So I think what was holding them back at BBB minus is something which would probably turn positive. But these are kind of benefits which we'll get only during the course of the year. And see, let's accept one fact that with the kind of uncertainty we're having about these tariffs, how it could be affecting growth of various nations, I think the foreign investors would also be a bit cautious about where to put their money. Now, the kind of pressure which is being put on the Federal Reserve to lower the rates, if at all they do it in a rapid manner, then automatically we can see that investing in other countries could become more viable from the point of view of investors. And we could be expecting something to come in the next 3-4 months. But it's going to be a slow process. Now, whether this is going to make other rating agencies upgrade, I'm sure they will take note of this particular development. So I think everybody has their own methodologies to arrive at whether they should be changing the view or whether they should be changing their rating. But this will definitely be considered by also Moody's and Fitch. I'm quite sure they will do it because this is a major change. And as what was mentioned by Mr. Gandhi, all these things are very, very sticky. It takes very long time for them to change. So even now changing to taking a positive, giving a positive outlook, that would also probably take a year or two. And then moving to the next level could take more. And all this time, it's a case of testing the economies, their models as to whether the economies are actually going in the right direction. So I think the strong policies which we have had, along with the revealed growth numbers, I think that has actually been the ultimate vindication of this particular upgrade which we have seen today.
Absolutely, and here's more to follow, like both the gentlemen today said. But Mr. Sabnavis, Mr. Gandhi, thank you so much for your time, and glad that you could join in with your take on the big S&P upgrade. But on that note,